joining the MEF to discuss mergers and acquisitions in the CPaaS and messaging space. I'm Paul Ruppert, and I'll be moderating hopefully a great panel we have in store for you. Looks like we have over 120 attendees from around the world this morning. So I'm sure that we've got a lot of people that are both interested and going to be actively engaged in the conversation. So first, some administrivia. If you have a question, please submit it in the comments section. And depending on the questions, I hope to fold them into the conversation as we go. And as we start to run out of time, I'll try to get them addressed at the end. So let's dive right into it. M&A can spark the swiftest of changes in an industry and appropriately get a lot of attention. M&A indicators can be clear and obvious from those from an outsider's perspective, yet at times can be unrecognized and unprepared for by those focused on their own performance engines, meaning the companies, and the directions of their own strategies. Messaging and CPaaS market dynamics are now sparking a considerable amount of M&A and IPO activity. Understanding the changes in the messaging and CPaaS industry and how they are pointing to future M&A opportunities is the purpose of this webinar. We're going to cover some of the M&A dynamics playing out presently and likely to play out in the future, discuss what aspects of the strategic environment CEOs, investors, and advisors might be looking at, what changes are occurring in our space that makes it opportune to use M&A as part of your corporate strategy, as well as discuss some of the recent past and current moves that have been made in the industry and are getting a lot of attention right now. So first, let me lay down a foundation of some data, activities, and definitions around M&A. So during 2020, which has obviously been a very strange and bizarre year for us in the world, according to merger market data, the value of US M&A in the second half of the year was lower than at any other quarter since it began tracking deals since 2006. And compared to the second quarter of 2019, M&A values were down 87%. Yet in the third quarter of 2020, value of M&A in August was twice that of January, while the number of deals in August was down by more than half compared to January. So what's happened is there are bigger but fewer deals while we are trying to climb out slowly during the pandemic. So what about mobile communication services like messaging and CPaaS and how this is impacting our industry? Well, as they say, timing is everything. Last week, Infobip acquired Open Market for $300 million. And in May alone, Cinch made 4 acquisitions, spending $485 million, which included the biggest, SAP Digital Connect, for $267 million, ACL for $72 million, Chatlayer for $8.2 million, and Wavy Global for $137 million. And there's also considerable regional activity around the world as well. In Singapore last year, 8x8, a customer care company, acquired Wavecell, a messaging aggregator. In Brazil, Zenvia acquired 2 other Brazilian companies just this past August. And in the US, on October 12th, US-based Bandwidth bought Voxbone. And of course, saving the best for last, just a month ago, Twilio acquired Segment for $3.2 billion. And there's also obviously in an M&A a very strong aspect of rumors around specific companies. Relative to messaging, some are big, some are small. Cineverse, Bix, Telesign, Mito, and Mgage are all thought to be on the market. And as I said, it was just last week that I also had Open Market in this category. And there's also, as I said, a spate of successful and emerging IPOs. And this is significant because oftentimes IPOs allow companies and CEOs to be able to marshal their resources, build up their gunpowder, and start looking for opportunities to either expand their reach or expand technology opportunities and get into the acquisition aspects of the industry. Just 10 weeks ago, for example, Route Mobile, which is an Indian-based company, went listed on the National Stock Exchange in India. And since that time, their market cap has tripled to about $900 million. CM got listed on the Euronext in Amsterdam, and then those circling around for a potential IPO include Link, MessageBird, and Infobip, which are planning IPOs by 2023. So are we on the brink of a breakout in M&A activity around messaging? I contend that we are well past what I would call the what phase. The if or why, in fact, has passed us by, and now we are in the what or who aspects of the business. And we've been able to put together a great panel with both operator experience and investor experience, consulting experience in M&A activity, specifically in messaging this morning. And let me start off with Gregor Eichler. Gregor, if you give us a wave.
Hey, Paul. Thanks for having me.
Thank you, Gregor. So Gregor is a strategy consultant at Altman Solon, one of the world's largest global TMT consulting firms. His clients are concentrated in the telecom industry with a focus on wholesale voice, A2P messaging, and CPaaS. And as part of his M&A advisory practice, he has conducted many commercial due diligences, as well as strategic assignments for both corporate clients and financial investors across Europe, Africa, and the US. He is also a former Deutsche Telekom executive. Lawrence Askowitz. Lawrence, give us a wave. Thank you, sir. Lawrence is a managing director at the Bank Street Group, a private investment banking firm dedicated to the communication ecosystem. His firm specializes in corporate advisory work, including mergers and acquisitions and capital raises for mid-cap companies. Bank Street has completed over 1,000 transactions, totaling over $500 billion of volume, working with broadband infrastructure, cable, unified communications, messaging, data centers, towers, and other verticals in the communications infrastructure and services sectors. Josh Rochlin. Josh, give us a wave. Thank you, sir. Josh has over 20 years of founder and entrepreneurship experience, incubating innovation and accelerating disruption, including being CTO of Xtify, a pioneer in the mobile customer relationship management category, which he also successfully sold to IBM. Later, as the CEO of Text, otherwise known as TCKST, a customer managing and engagement provider, he led the successful sale to LiveVox, where he is now the GM of their digital enterprise engagement business. Alan Masarek. Alan, give us a wave.
How are you?
Thank you, sir. Joined Vonage as CEO in November 2014 and retired on June 30th, 2020. Under his leadership, he transformed the company, driving rapid growth and evolution from a residential home phone provider into a global business cloud communications leader. I think Vonage could have been categorized as a CPaaS before the CPaaS category was actually invented. Through strategic acquisitions, coupled with swift scaling, Alan created one of the world's leading CPaaS companies. And prior to Vonage, he was the director of Chrome and apps at Google, as well as the CEO of QuickOffice, a mobile productivity software firm with over 26 million users at the time of Google's purchase of it. And I'm Paul Ruppert. I'm president of Global Point View, which is a strategy and solutions consultancy focused on market entry, revenue growth, product innovation, and acquisition thesis for mobile services companies and enterprises. I've been at the forefront of mobile messaging for 20 years through senior executive roles, as well as serving consulting clients, including Cineverse, Facebook, MasterCard, LivePerson, Infobip, HIG Capital, and others. And over my 2 decades in the space, I've been involved in 9 successful acquisitions, ranging in size from 6 million to 720 million. So I'm going to give a lightning round overview of M&A in the next 2 minutes. So it'll be really quick. This is just to be able to get a foundation of understanding of vernacular and what we might be talking about today. And these slides will be available to everybody who's participating in the webinar this morning. So the first is we've got horizontal mergers, which is essentially acquiring companies that are in direct competition with each other in terms of product lines and markets. Second is verticals, which is targeting companies that are along the same supply chain. For example, a messaging routing company acquiring an infrastructure company that supplies MNOs. Market extensions, which are mergers between companies in different markets that sell similar products or services. Product extensions, which are mergers between companies in the same markets that sell different but related products or services. And last are conglomerate plays, which are mergers between companies in unrelated business activities. There also is a subcategory of market extensions, which include capturing strategic customers, capturing geographic markets, capturing emerging technologies, defensive acquisitions to stop a competitor from acquiring an acquisition that could weaken your own competitiveness, as well as partner-first dynamics. There are usually two types of buyers in this space. One is the strategic buyer, which are companies that operate in the same industry. And the other is financial buyers, which are usually private equity firms who are looking to play an arbitrage deal, which is essentially buy low and sell high after some period of time. So that's it very quickly relative to the slides that we've got. We're going to go right into real people talking to each other. You know, if you look at the nature of the messaging business, it's such that its state of affairs today, I would categorize this, are we in a bleak period or a chic period? I'm not really sure which it is, because the bleak period is you just look at the margins, you look at the reality of it's a transport, report, repeat type business. And even in the context, if you look at mergers or you look at acquisitions over the past, going back to about 2006, for example, when Sybase acquired the old Mobile 365, that was a price to or cost to revenue basis of about 3.7. When mBlocks was acquired by CLX, that was essentially a one-to-one deal. And most recently, when Cinch acquired the SAP Digital Connect, it was priced out at that ratio of about 0.74. So that's the bleak aspects. The reality is that this is a consolidating and commoditized business. But meanwhile, you've got the chic perspective. You know, you probably saw that MessageBird had got a Series C round of 200 million based on a valuation of 300 billion. We've been talking about Twilio, which is now a $30 billion market cap. And I'm trying to figure out which is the direction that if you were a CEO of a company in this space, relative to M&A, how can you incorporate these dynamics that are really conflicting into your own strategic planning? Gregor, can you kick us off here relative to, let's say, the analyst perspective, and then you know, the financial aspects from Lawrence, and then Alan and Joshua from the operating CEO perspective, if you will, on that point.
Great. Yeah, of course. Thanks, Paul. Great question as well. And let me try to answer this also from my perspective. I think what we're seeing here in terms of undervalued asset is that many companies see their messaging business as commoditized, as you said it, and as non-core to their strategic direction. I think that's what we've seen with mDoc selling open market to Infobip. And I also read that it was in the direction of the CEO saying that it's a non-core strategic asset to them. And on the other side, we have SMS aggregators that do provide a commoditized service, basically just sending and transferring messages across devices. However, while that is commoditized, there is the aspect of adding like a service platform to also add a message platform and combine these two. And I think exactly this is driving the high valuation, that you add a service layer where you can actually upsell service and driving also revenue in a highly commoditized business, which is also driving the valuation. And you have to also look at the two types of buyers that you just mentioned, strategic and financial. And I think you also see a mix of those. If you look at the Infobip and OpenMark deal, you have to consider that Infobip was just recently backed by one equity partner for 200 million. And I think they can benefit from the strategic side that a partner such as one equity partner can bring to Infobip. And to give another example, HG Capital acquired Ascendex, merged it with Mobile to Comify. And I think such a play would not be possible from a purely strategic buyer perspective. It requires a financial investor that has the experience in driving this M&A effort. And with this drive of the M&A effort, with this expertise, you can actually drive value in this commoditized business. So that's from my aspect, the way I see it.
Lawrence, from where you sit, what do you think?
I think Gregor hit some great comments. I'll just continue to add to that. I think there's an element that we refer to messaging and CPaaS in a very big way. When people talk about some of these lower margin companies, they're really talking about some of the transport, maybe some of the SMS aggregators. Those are the companies that I think, Paul, you were talking about, maybe getting those low 1x revenue multiples. Perhaps a way of thinking about it a little bit more is thinking about it not on a gross revenue basis, but taking a look at the gross profit multiples. If you take a look at the revenue at a gross revenue basis, you really can almost split up the universe of CPaaS generally into companies that may have margins, we'll say plus minus 20%, and those north of 40%, 40, 50 plus percent. I think that gives a little bit of a sense about where valuations are. So that's perhaps one big macro comment about valuation drivers. I think there are a bunch of other components that are in here too. Some of these low-level, lower-priced companies are very transactionally based. There's really no stickiness to the customers. Those customers that are able to get longer-term contracts, maybe have some software, some other stickiness to them, they get higher margins, they get higher values. That's another building block to this concept of margins. And the last thing I would perhaps add to this, because I'm sure Alan and others want to continue to build on this theme, is the notion of customer concentration. Some of the companies that are out there really are perhaps reliant on some giant customers. Those companies that are in different verticals, maybe a developer orientation, carrier orientation, or enterprise orientation, you'll see a different mix in terms of how their customers are, whether they're transactionally based or more software based. Those that are reliant on the enterprise market, for example, that might have a Google or a Facebook or one of those large customers, that might hurt valuation a little bit. And then the carrier market, if they're very reliant on an AT&T or Verizon, say, for a bulk of their revenue, that also impacts valuation. So I just wanted to unpack a little bit about what you said, that, and what Gregor also was leading into, that the transport layer and lower margin, gross margin businesses do get lower valuations, with some other color that I would add that also impacts valuation. And before I hand it off to others to continue that point, I would just add that the dynamic that we're at play right now is so dynamic that Link Mobility actually has already gone public. They already have done another acquisition. They bought an Austrian company, I think, earlier this week. So notes from day to day really continue to evolve. So from a banker's perspective, it's phenomenally busy, and we think it's a great market, and we're probably only in inning number 2 in this space of broadly CPaaS.
Exactly. Josh, your perspective as a CEO who's actually gone through these, what's your take? I think you're still on mute.
Thank you. I think what we're witnessing is the journey from dumb to smart. The channel that customers are being engaged on has become less and less relevant. And companies need to decide, are they going to invest in smart, or are they going to buy dumb at a discount to where it used to trade? And I think that when you take a look at what Infobip has done, is they have bought channel and partners at the same time that back at the mothership, they are developing smart. They have shown that they can, and I have nothing to do per se with Infobip. I've just been able to sit back and watch it. So I think that as M&A goes, you will have players like a Sinch, like a Link, looking to build capacity, realizing that they're buying that at a discount, but also understanding that to enter certain markets, they want to have customer relationships. So for Infobip to have acquired the open market customer list alone would have been very, very valuable. So I think that that's what we're going to see more and more of. Who can I bring into my orbit of clients and use my own internal IP, my smart, to lever the discount that I just bought dumb at? That's the way that I see what's going on.
So, Alan, you've been at the forefront in the past of how you've been able to take these, just as Josh was talking, smart and dumb choices. Why don't you give us some insight from your own experiences and your own perspective now going forward?
Well, sure. And first of all, thanks for having me on the panel. I think it's almost undeniable that we're in a chic phase on the CPaaS side. And I think, the other panelists have raised some really good points looking at this, for instance, from a margin perspective, or really where the pricing power relies, because you do see this dichotomy between, very low gross margin companies and higher gross margin companies in the broader CPaaS market. And like anything, it goes, in my view, to in pure messaging, in simpler applications like 2FA, in markets where the carrier controls most of the power and where your customer base may be skewed towards larger customers who are going to have more pricing power in that relationship, you're going to see lower end margins. You're going to therefore see lower multiples. And even those companies, some of those who are the aggregators, have the direct connects with the carriers. Again, a portion of their business is that, and a portion of their business is really more enterprise focused. I tend to think of it, one of the leaders in this industry referred to it as, what is the railroad track in terms of the direct connect, and what's the railroad car, which is front facing the enterprise. Clearly, you're going to have a higher margin opportunity if you're in the railroad car, but then it goes to how sticky is the application itself. If you're in a very simple messaging solution, you're going to get crammed down from a pricing power perspective by the downstream customer. It's going to reflect itself in its margins. If you're doing more high value solutions, and by the way, you're obviously going to have more traditional software gross margins that could go from 40 to 90%. And again, if you've got a more broad-based customer base who are smaller by and large, they're going to have less pricing power with you. And I think that you're going to see that reflected in the in multiples. At Vonage, what we did is, we look at this market as it's just one big massive conversion that's happening. We went out early, and remember, we were a company, forget our residential roots. We were a company when we made our initial pivot into business communications, cloud-based. It was initially in the applications market, UCaaS, and later in CCaaS, Unified Communication and Contact Center as a Service. It became clear to us that really this is all going to really be a platform play. And so the first acquisition we did almost 5 years ago with Nexmo, which again was almost entirely an SMS play, was really to get the platform play going. And then we followed that with organic development of voice capability, which again, there was a lot of capability within Vonage to do that. Subsequently added video through acquisition with the acquisition of TalkBox, developed IP messaging internally, and then also partnered on the email side. So I think if you look at the strategies that so many players are doing, is they're following that. They want to be a platform, fully programmable across the modalities. Because at the end of the day, and I actually, I think what Twilio's last comment is a very interesting thing with this latest acquisition, is they're saying this is not a communication play. This is a customer engagement play, and communications is core to it. And communications is not limited to messaging, of course. Communications is multimodal. And so it's where and how you have to interact with your customer, which is going to win the day. And that's precisely what they're doing. That's precisely the strategy that we were, under my leadership, that we were doing at Vonage, and I think continues to this day. And you see others following the same thing. Whether it's InfoBip buying Open Market, which gives them both a sort of reseller piece on Direct Connect, gives them an enterprise side as well, gives them U.S. entrance. They already have they've accumulated, after starting in messaging, a more multimodal platform as well. So I think you're seeing it everywhere following kind of the same theme.
Yeah, Alan, I think that if you take a look at a acquisition a little bit adjacent to what we're talking about here, Five9 2 weeks ago bought a company called Inference. What Inference is doing is AI virtual call center operators. Yeah. They're taking a company that already has access to the channel, they're combining it with their smart, and now levering that to an even greater valuation. And I think that's what we're going to see more and more of. After this land grab for capacity, people, as you just said, Alan, I think perfectly, people are going to invest in platform, and platform is going to become more and more programmable. We saw it in the ad industry. We saw it in lots of other industries. We're going to see it in our own very shortly.
100%. I completely agree. I think you can look at several examples where, hell, we were doing at Vonage ourselves after we bought New Voice Media to have a contact center solution. Subsequently bought a company named Over AI, which was a small AI shop that was focused on, conversational intelligence, whether it's call deflection or, again, broadly speaking, how can I most intelligently route, whether it goes to a bot or whether it goes to a human in the call center application. I think you're going to see more and more of that as programmable solutions into the broader, into your broader communication stack. I think a lot of people have thought about the industry sort of in this balkanized way. There's UCaaS over here and CCaaS over here and now CPaaS. And then even within that, there's a modality here, there, and the other. That's all going away. Those are not segments. These are simply elements of what is going to be a fully omni-channel way to address your customer in a better way.
Yeah.
I sold my over-the-top company, right? Both Xtify, which was push notifications, and text, which was SMS. I sold them both because I didn't believe the story anymore. The idea that simply having a single modality without that intelligence was going to be valuable. But,
right.
Now it sits in LiveVox, or it can sit in, someplace else, and it brings that much more to the asset. So I think we're going to see that more and more, this convergence between CCaaS and CPaaS for sure.
100%.
Yeah, and even in that regard, there's essentially a cross pressure from the perspective of being in, let's say, one of those transport companies, and then trying to deal with, on a strategic basis, if you're part of the management team, what is it that we can do to add on additional value layers? And Alan, you just laid out, the strategy for the means to enhance your capabilities is essentially an acquisition strategy. You got to start looking at how you are going to go off and get those pieces to be able to create that platform that you just outlined. So in that regard, there are adjacent players relative to convergence. Now, Josh, you just mentioned it earlier. Alan, you were also talking about customer care and customer, conversational commerce.
Yep.
And I've been a consultant to a customer care software, or customer care call center software provider that has that vision, and they're active in the market. And there are others as well. It's just not LivePerson, which is where I was. And I'm wondering, do you see other segments besides customer care where this can be a true value add as a platform addition, as a platform enhancement? We can talk about the customer care side, but what other segments might be looking at this space?
Just real quickly, my view is it's CRM. The missing element is CRM. Because, and this is again, one man's opinion, this is a strategy that I was obviously implementing while at Vonage, but if you think about, go back to this notion I said where things used to be sort of balkanized. UCaaS was separate than CCaaS, because there used to be the notion that an employee was different than an agent. That's no longer the case. Now everybody's virtualized. They have to be on the same system. but think about just, sort of normal interactions. You have your BDR inside sales group doing outbound to some target list that they got from Zoom Info or Sales Intel or what have you, something like that. So they have a target list trying to turn those MQLs into SQLs, turning them into ops. Each of those interactions with those potential targets need to be captured in the CRM, and those interactions are going to happen multimodal: email, chat, text, voice, etc. Now it becomes an op. Now the salespeople get involved. A qualified op, same thing. All these interactions with the opportunity, and all of which get captured in CRM, again, seamlessly, and now it becomes a customer. Now that customer has traditional inbound from customer care. I've got a billing question, a technology problem, install, whatever. Those are also completely multimodal, all have to be captured. And then you're doing marketing campaigns to the customer. I want to upsell you, what have you. Again, multimodal, all have to be captured by CRM. That tight integration, that's why I keep saying this is about customer engagement ultimately. That tight integration is whether it is a target or an existing customer, everything in between. I've captured all those interactions regardless of mode by which they occur. That's, I think, where the world's going. And I think you can sort of follow that in some of the acquisition strategies that many have followed.
I completely agree, Alan. I think the last 2 years that we've seen of the growth of Twilio's market cap to the tens of billions of dollars, perhaps was a market observing something different. Maybe they were just observing that they were owning the developer community, that people were realizing that our phones, we weren't making phone calls anymore on them, but we were communicating through other apps like Uber. And when people started to realize that inside of all of these great apps, Uber is just a car company, it's a logistics company, but all those texting and phone calls was handled by Twilio. I think that was the first wave of people getting excited about the CPaaS space. But when you see, I would say that you were very early on buying Nexmo and a Vision, but to your point, I think Zendesk buying Smooch and some of their acquisitions is getting to that theme that we're in the early stages of not just consolidation within CPaaS, but the CRM companies realizing that it's not just a text message or an email that you're doing. You have to understand your customers. You have to understand them completely. So this is American Airlines having a very holistic idea of their customer, who it's not just, I'm going to send you a coupon for something. It's somebody driving up to JFK, and American Airlines knows that your flight's delayed, and they're going to be able to send you a text about your new flight. You need to have full CRM solution to know that that person, where they're traveling to, they're a platinum customer, do they want to get an upgrade, have a rich communication service on the phone so they can go ahead and click a button right away. It's all CRM for American Airlines to be able to provide a wonderful experience. And then it stops becoming CPaaS. CPaaS is just the method of the messages getting out there to people, but it's the wonderful engagement that you're going to have, whether it's through a WhatsApp, whether it's through a message, however it is that people want to get the message and they prefer. It's the people who have a full, wide vision of what that customer looks like that can be able to engage in the most meaningful way. So I completely agree with that's ultimately where this vision goes. Ultimately, it's the sales forces of the world that are going to incorporate the entire CPaaS ecosystem, or Oracle or others, or LivePerson, as Paul was referring to beforehand. They're going to really be the ones who will be the ultimate owners after we spend innings 2, 3, and 4 probably aggregating chatbots and AI and omni-channel capabilities.
Yeah, Laura,
and
just real quickly, look what Salesforce has done going into voice. They already had the other elements, modalities, but moving into voice, they've done a good bit with partnership now with Amazon. Or look even what Microsoft is doing with Teams and Dynamics. Again, moving, I kind of think of it as moving forward. Others are sort of moving the other way, but in wherever you started from, there is this convergence that's happening. You can just see it.
well, I just want to, from the trenches, Lawrence is suggesting that the CRM companies at the end of the day are going to be the owners. And that is a possibility. The other possibility is that the CRM is an element in the entire engagement process. So I know that when I was at IBM, the marketing cloud was ascendant, and the CRM had not yet become the system of record. Very quickly, you remember that Adobe bought Neolane, and Salesforce bought ExactTarget, Oracle bought Responsys, and those are three names that some of us on the phone may remember, but it becomes sort of an afterthought right now. I think that, and this may be coming back to M&A and where M&A is going to take place here. It's interesting to ponder whether or not I'll go back to Five9 because I've taken a look at them, whether or not Five9's partnership with Salesforce, which is very tight, and has precluded Five9 from developing their own CRM, or company like mine, like LiveVox, where we've said no. We understand that, as Alan just said, that the contact manager is the key, and that has to be closer to the messaging company or the calling company, whatever it is. Those are two different ways of looking at it. Lawrence may be right. Lawrence may be correct that Salesforce and the other CRM companies are going to be the net buyers in this world. But there's an alternative journey where some of the companies on this call now, and I've gone through the list, maybe they themselves realize that it's an API ecosystem. We need to dip into Salesforce, dip into Zendesk, dip into some of the others, but that the transport layer getting smarter is going to be the alternative. And I think it'll be a healthy battle. I think that's why there will be M&A. But I don't know, Gregor, what you're seeing out there, whether or not you think that Oracle and Salesforce are the Apple and Microsoft of our space.
That's a great point. And what I wanted to add to this is I completely agree with that. In the long run, it's very likely to see some convergence. However, if we take a step back to the current reality for many other CPaaS companies, is that we still see quite a variety of subscale players whose business model is still transactional driven. And while there is the future set towards the convergence and everything is unified, we still see that even those subscale players have good contact to their customers. And oftentimes, exactly those customers are less price sensitive because the big players such as an Uber, Facebook, they're super price sensitive. They route their message wherever they go to really reduce costs. And what I think excites some companies in picking up these subscale players is that you can bring together this customer base of lower price sensitive customers, bringing them together as it was said, I think by George, it was you who said it, to bring together the top line, to bring together the customer, so increasing your top line. And because this technology is super easy to transfer, it's not too hard. We see it now with Comify in the UK picking up 2SMS. They even mentioned that they picked up 2SMS because of their customer base and integrating them to their platform. So I think while there's this outlook of convergence, which is the super smart, there's still some room to play for the dumb transactional service just because of the fact that we still have successful subscale players.
So in that, to kind of wrap the conversation, the flow of the conversation, we've got the smart versus dumb. I don't want to use that as a characteristic, but that's the easy way to understand this. The transport versus the additional value layer. So wouldn't that mean that if you are an aspiring CEO and you're in there trying to figure out what the new strategy is, how to be able to position the company, there are two routes here. You go starting looking for these additional value layers and technologies that you can implement, or you could play a last man standing game. And the last man standing is, okay, I'm going to go full into the transport aspects, and I'm going to go acquire every transport company known to man and be the last man standing. Is that, you see that as part of the dynamics that we may be going, or am I being too simplistic in terms of, route A versus route B?
maybe I'll start and I'll build on what Gregor said and then hand it back to Gregor. First of all, I don't really like the dumb versus smart terminology, not just because it's being negative, but I would say that even in the transport layer, people should appreciate that not all transport companies are the same also. There are KPIs that people are dealing with. Latency, being able to prove that the message was delivered, you don't have 4 hops to get somewhere. If you have real carrier economics, you have and carrier connectivity tissue, there's a real economic advantage. So even within layers over here, there are differences. But I do agree with Gregor that in the near term, there is a fear among some of these transport companies, we'll say, the base layer, as the Gartner stack has it laid out, who have a fear of being left behind. I think if you don't have $200 million in revenue and you're sitting at 60, 100, 150, there's a fear that the consolidation is going to leave you behind. And I think that is the 2021 theme for a lot of companies, that if they don't participate in the consolidation in the near term, I don't think they have the opportunity to necessarily say, oh, I'm going to go ahead and buy an RCS company or a chatbot company, something AI. They need to gain scale quickly, and I think you'll find consolidation there. The private equity guys are not going to put money into a small company. They may actually have better technology. They may be better, but the money is going into Infobip and to MessageBird because they have 700 million or 300 million in revenue. It's a scale game when you're just in transaction, low margin business. So I just wanted to build a little bit on what you were asking and what Gregor was saying, that there are dozens of these smaller companies, and 2021, they should find a home and get more capital to enable them to compete for those other areas. The companies that are already of scale, the reality is that Cinch went ahead and bought an SAP interconnect business. One can argue is, why'd you go back down? You already had a wonderful ecosystem. And the reality is, as I was saying, not all of the connectivity tissue in the transport layer is the same. SAP has some wonderful KPIs in terms of proving message delivery, that if you're an enterprise customer, even a Facebook on a one-time password, you want to know that it doesn't take you 3 seconds for the message to get delivered. You want to know that 30% of the messages didn't even get delivered, or you couldn't even prove whether it got delivered or not. SAP's interconnect business, Tintech, there are a number of companies that are out there that actually have connectivity tissue that make a difference. But let me pass it back to Gregor and others too.
Yeah, one of the biggest is one of my former companies is Cineverse, so I agree with you completely. So go ahead, Gregor.
No, I can just agree, because at the end of the day, my personal belief is also at the end, all those messages need to transport it somehow. And if you can offer exactly the low latency, if you can be like one of the big players like Cineverse, like a big, and you can offer excellent service, then at the end, maybe there is the right position for you right in this spot, and you don't need to add service layer, because you can be the netco, and that's what we see in other industries, like bringing some insights from a cyber perspective. Then you see that there's a opco netco split, and that might be also a valuable play for this industry, where you can see you do not need to add the service layer. You can find your niche spot just on high scale or hyper scale, so to say, by having excellent service, transmitting messages quicker than your competition, and by this getting all the customers. So I completely agree with you, Ron, and also probably you can add to this, Paul, because as you said, you were at Cineverse, and I read an article about you. I talked to you about it, that some messages were not delivered for Valentine's Day, and then the flood of Valentine's messages came in 3 weeks later. So this just proves the point. And this is huge. And if you have those messages, if you have the scale, even that didn't hurt Cineverse, right?
Yeah, just back to scale, not to brag on Cineverse, but when I was there, and I left in 2015, so that happened after my time, but they do about 2 billion messages, almost 3 billion messages a day in terms of the total network volumes, which are massive. It speaks to the scale of this industry and the scale of the business, that you have to be global first. and then all these other capabilities. One of the things relative to value and whether it was transport or other additional capabilities, do you see that there might be a change in pricing dynamics as a result of this? I mean, right now, as I mentioned earlier, transport, report, repeat is really kind of the transport layer. It's all transactional. We all know that how this is all working. We're now down into tenths and hundreds of cents in some of the large two-factor authentication customers that are around the world, as we all know who they are. Do you see a means to be able to flip that dynamic and maybe go from being a transport layer provider and then changing the dynamics of the pricing to be able to move up the ladder, if you will? Anyone? Jump ball?
Maybe I'll start. I'm happy to take the first start. I think there are two parts to that question, so I'm not going to give a one-word answer. I think pricing is tough. If you're in a transaction business, pricing from the carriers is probably going to go from a fraction of a penny to a fraction of a fraction of a penny. That's the reality. But it does not mean that you can't continue to migrate your business. If that's the only thing you offer, over time that becomes very, very difficult. It is commoditized, however much there are differences between the customers. And again, Facebook and Google and the big players and Tencent, they're going to mix their customer base. They're not going to rely on one. And if you've got better KPIs, you're going to get a whole bunch of additional traffic. But it's still tough. Telesign and BIC's combination was an interesting dynamic. Again, some of the, we can look backwards to look forwards also. Wholesale voice was not a sexy business. That was a minutes business. That was a low, tough, low margin business, and they went ahead and decided to move towards CPaaS. Well, it doesn't mean that CPaaS doesn't have its own dynamics in terms of pricing, but leveraging the global network connectivity and the relationships with the carriers, there are obviously synergies that one can benefit. So there are different ways of building a business that's not just omni-channel and getting into more sophisticated, but you can also improve your margins even in a tough margin business, which I think BIC's Telesign has done nicely. And then, of course, there are other areas to grow up from there, whether it's authentication and different ways to continue to expand your business.
I would add to that the larger customers where the SMS termination is in aggregate expensive to them, they are very interested in IP messaging solutions that avoid the SMS termination. And that is particularly in markets in Asia, for instance, where the carriers have have a dominant position in a particular market. They're the ones, first of all, capturing the most amount of value, not necessarily the provider, let's say, of a 2FA solution or of let's take an example with Uber, the in-app communication, whether it's messaging or voice. So the opportunity to turn either of those modalities into an IP solution, again, like we have solutions, or we have solutions at Vonage where it was fully programmable. It would sniff the network if it was adequate for a high quality IP voice, easier, a lower requirement from the messaging point of view, default to that. It might also default to the OTT apps as well. And so in a microsecond, it's what, we don't know what you have. So you think about all sorts of communications. If Target department stores is trying to reach a customer, easiest thing to do, obviously, is to do it. You have the Target department store mobile app. Well, I don't know if you have the app one. I don't know if you have notifications turned on, but I can pop it really quickly without having to try to terminate an SMS for you. Failing that, I can pop WhatsApp, WeChat, Line, Messenger, etc. And then failing those, and this obviously all happens nearly instantaneously, I'm going to default to SMS. So I start with the least expensive and perhaps even the most effective, if you have my mobile app, down into the most expensive, because again, we know SMS at the end is sort of the gold standard. You can pretty much be certain that it's going to get delivered. those are things that at scale are really important. And it's a way to take what is, you know, a basic, you know, in-app communication or a 2FA solution and move from what has been very commoditized to something that's a hell of a lot more value and you can get paid for it. It's a lot stickier as well. So you don't have this problem where someone says, oh, you know, I can get it for a, you know, 1/100th of a second of a cent less. And so I'm going to move my traffic over here to the other provider.
Oh, you're on mute.
Sorry about that. So if you're one of the, you know, many representatives from companies across the spectrum that are participating today, and you're looking at the horizon trying to figure out what to do next, from the CEO perspective, what are those steps? And then from the analyst and the banking perspective, since we're wrapping up, we're about 7 minutes left, and this will probably be our last question, but how do you approach this? You know, how do you skin this cat, so to speak?
Well, I think that there's something that Lawrence brought up just in passing, and there's something else that we haven't discussed. One is private equity. I think that private equity is taking more and more interest in this space. They believe in an aggregation game. They think that they can maximize assets when they're combined. They can put capital to work more efficiently. So when I was selling companies, I didn't really think of that as a consideration. Today, I think there is a different calculus that can be done there. So I think that's interesting. The other area that I know we always used to speak about, you know, machine-to-machine messaging. As we see more and more edge appliances and the Internet of Things, I think that there's not really a dominant play yet there. So Al and I talked a lot about customer engagement, but you can think about a whole new opportunity in appliance engagement. Mm-hmm. And I don't know that we know exactly what that means, but there's no doubt in my mind that my Alexa device will be talking to my car, knowing how long the trip will be to my office when we open offices again, or what time I like my coffee machine to go on. And while a lot of that is just going to be using, you know, the network within my home, I think that we're going to be seeing other opportunities to leverage some of the infrastructure that some of the companies on this call have built. So I would, you know, think outside the box when you're thinking about acquisitions. I've been fortunate to do it a bunch of times, and very often the companies that were interested were not on my initial list. So think wide, go deep, but always be building your business and always be selling your business at the same time.
Indeed.
Yeah, maybe if I can add to the point that Josh just said, one thing that what I see in my daily work is really that PE is also picking up interest in this industry. And I think one piece that the industry can get from a PE perspective and what value PE can bring to the industry is really their experience in M&A effort. How do you drive value through M&A? How do you merge those two companies? How do you leverage the synergies and leave you to focus on your core business, which is like the go-to-market strategy, which customers should you acquire? And they can help you pick the right partner, not only in terms of the right financial and commercial advisor, but also scan the market more efficiently and structure. So I think that's also something that we'll see in the near future, is also PE activity also picking up as opposed to purely strategic M&A activity.
Yeah, I think we'll see the private equity, as we talked about, within the IPO market. It's very frothy. Twilio, Cinch, and Bandwidth's valuation has really left room for other companies who weren't thinking about going public to go public either via SPAC, which is almost a hybrid, one can argue, of IPO and a sale, because you can sell down much more in a SPAC environment. So you've seen Kalera and CM go SPAC route. You've seen Link Mobility, which was taken private, and then they went ahead and came back out to IPO into the Scandinavian market. So as long as the market remains frothy, shall we say, in terms of some high valuations that are out there, as long as cloud and messaging continue to grow, we have a lot of tailwinds that will continue to fuel M&A and private equity interest. For each company, you have to be honest with yourself. You've got a different skill set, different temperament. Think about what works for you. If you're going to sell out 100% for cash and move on, don't care about the other employees, that's one mindset. If you care about your employees, you have to think about and the culture. Those are important considerations as you map your future. It's not a 1 second conversation of let me merge with somebody else the same size. There's value in scale, but what else are you getting out of it? You have to really go through that math and thought process. But I would strongly suggest that because of how the market is moving now, that those conversations in the C-suite of these companies and the ownership really start thinking about what they're going to do, because the world is changing rapidly. We've seen in the last 6 months, 6 years worth of M&A activity, and that's just going to continue this pace.
Yeah. Alan, you're off mute. Did you have anything else you wanted to contribute on this point?
Look, I think they've covered it really well. The only thing that I would encourage CEOs to think about, and this will, not trying to sound harsh, but be very objective as to whether, the strategic poker hand you're playing makes you the opportunity to be predator or bait. And being bait is a perfectly fine thing to be, because you can build a lot of value for your stakeholders. But if you look at your company and you have, if you can be honest about it, and all CEOs tend to be pretty type A and, believe passionately in what they're doing, but I would look really in a very realistic way at your market position, knowing that there is just going to be a ton of M&A. And again, decide whether are you really a seller, not the buyer? Mm-hmm. Maybe to put it in a more politic way, and make that decision. There's because the level of consolidation that we've seen thus far it's going to get a lot more in 21 through 23 than it's been to date. Going back to the API side, I used to say, I'll give you an example. We bought Nexpo in May of 2016. I had an equity analyst I won't mention the person, from an investment bank, one of our covering analysts. This is in 2016. Again, we were a UCaaS company at the time. I had to spell Twilio to this person. The amount of understanding, I used to say, a few years ago, half the world couldn't spell API. Didn't understand what CPaaS was. So the point is, you've had this, you've now gone like this almost vertical line in terms of understanding, appreciation of the value, rate of deals. But we're still, I think, Lawrence, you said earlier, in the second inning. That's true. You're going to see more and faster. Decide which side of the transaction you need to be on, would be my advice.
Excellent. So we are right at 1 hour, but I have magically twisted the arms of my friends on the panel here, and we are going to be staying for a few more minutes. We've got a couple of questions from the audience that I think are germane to the discussion so far and probably worth answering. I've got one from Chris Bruner. How important is embedded payments going forward? Is it a value-added service, or does it become a critical component of the omni-channel strategy? I think Josh might be the one who could probably field that, given his comments so far. Joshua.
Yeah, sure. So I'm sorry, my camera's off. I seem to have some low bandwidth issues. So we've done deals or integrations with companies like Repay, and we have found that having payments pre-positioned with a strong integration as part of the customer journey is a must. but there is no single company that we feel has to be your dominant partner here. So you can use, Stripe APIs, or you can use other pieces within the ecosystem. But I would say it's not only thinking about it as payments access. You want to be able to have. I just yesterday signed up for the Amazon pharmacy. Wanted to see what the journey was. Amazon, just by knowing me, was able to identify my insurance company. And I think we're going to see more and more the whole API ecosystem, access to payments, access to your insurance, access to who your cable provider is, all of that stuff is important. And I imagine that whoever asked the question has a particular interest in payments, but we're going to be just a greater and greater open ecosystem, and deal yourself into that game, make your platform as open as possible. And I think there's a great benefit. Obviously, an Apple of this world can afford to go with Apple Pay. But I think for the rest of us, open will be the name of the game, and either be a net buyer or a net seller, but deal yourself into that.
Indeed. Okay, we've been talking a lot about the OTTs, and a couple times the carriers have come into the conversation. But I've got a question from Andreas Mann, who's asking, how do you see the role of mobile operators in this ecosystem and relative to M&A dynamics of the industry?
Yeah,
so I'm going to interpret that as not operator buying operator, but how all this impacts the operators.
I would actually see it from the different perspective, not how is this impacting the operators, but how are operators impacting this business. Because what I've seen in a couple of projects is that, one, the threat of operators moving into that business is very, very limited. They've seen that that's not core to their business. So if they had it, they divested it. But I think it's actually fueling the consolidation of the industry, as operators are consolidating as well, and they don't want to deal with that many transactional-based CPaaS players that have the direct connection. So as you get less direct connection, because you just have a limited set of operators that you can connect to, you will need to see a further consolidation to link to those operators. So actually, that's the role of the mobile operators, that their consolidation is actually further fueling the consolidation of the CPaaS industry.
Yeah.
I'll just offer an observation, some of which I'm sure people are aware of. 5G is a really big deal in terms of how the operators are spending their time and efforts. They're selling their data centers. They're redoing their balance sheets. They're selling towers. They are trying to build out. We're not 3G to 4G, which was pretty easy relatively. 4G to 5G is a big, big deal. And I think that's where carriers are focused right now. Carriers are not coming to look at this space. We in this little ecosystem on this call are very focused on CPaaS, and we think it's be all and end all. At Bank Street, we work on the broad communications ecosystem. We're doing a ton in fiber and towers and data centers. I don't see carriers spending time in this space, certainly for innings 2, 3, 4. Once 5G is built, for the most part, and rolled out, I think people are going to see that 5G has changed communications. These network slicing, terms that don't mean anything to people right now, really how IoT gets to play out. All of a sudden, there will probably be, when we're in inning 6 over here, to keep on this analogy, there will be some touch points of what 5G has enabled in this new ecosystem, and where CPaaS is at that point in time also, where things might start to dovetail in a very interesting way. But in the near term, where people are thinking about M&A and things like that, I don't believe that there will be a carrier that will spend time, certainly through 2024, say, let the ecosystem roll itself up, and they've got bigger fish to fry.
Yeah, and even
you have to understand, these companies are worth tens and hundreds of billions of dollars.
Yes.
They're at a very different scale.
And that circles back to your earlier comments relative to If you are a $100 to $200 million revenue company today, and we're only in inning 3, something's got to change. Back to predator or prey or bait, as Alan put it. There's one last question that's been submitted, which is from Ian Dempsey, and he states: as companies move as companies move up the ladder through acquisition, do you think this will eventually eliminate the gray route market, as the larger acquiring companies will not want to tarnish their reputation with such activities? That cuts both ways. That could impact the price in terms of the valuation of the acquisition, or the operating costs going forward post-merger integration. Thoughts, comments?
I'll start, but I really don't want to finish it. I'm going to leave it to Gregor or somebody else to handle that.
Go ahead. I'll try. I'll throw my body on the grenade if you like.
I'll just offer up the founder of IDT, a fellow by the name of Howard Jonas, who founded the first, I don't know if it's the first, but early player in the VoIP industry called Net2Phone. He has a book out, and I would suggest you go ahead and take a look at that book. He didn't start off as a multi-billion-dollar company. There's some interesting iterations of companies until they get to their stage. So there may have been some companies, won't go through any names, that have done gray routing and different things to grow their business. But I do believe over time they've tried to migrate into more authentic, shall we say, traffic and routes. And I certainly believe that when you want to move up and you're at a certain scale, you want to have audited financials by a auditing firm. There are a bunch of things that do change, I think, as companies perhaps want to be public, want to attract hundreds of millions of dollars from private equity firms, want to win big enterprise clients. So I do believe it's not an M&A orientation necessarily, but it's all of the pieces as companies migrate over time.
Okay. I completely agree. No, I just want to say I completely agree, and that's exactly what we've seen in some projects, without also mentioning any names there, but that people are concerned that some firms do gray routing, and reading this question here, that they have this reputation, which is hurting potentially also valuation. And if you want to grow and be acquired, that might be some limitational factor, but it's certainly, if you're subscale, a good way to sustain your margins, let's say. But you have to think about, if you want to grow, how you will grow out of gray routing.
Right. All right, so the last question of the day, ironically, is about RCS, Rich Communication Services. And that's from Inderpal Mumik, who states, how do you see RCS impacting the M&A activity? I mean, I can start off with that because I've done a fair amount of work in the RCS world. And my take is it goes back to what Lawrence and Alan and Josh, everybody's been talking about here, which is what's the valuation, what's the value add that you're bringing here relative to going beyond just transport. So if you're a messaging, a map developer or map provider, you're going to be able to have to demonstrate what is different from you from the rest, as well as how is it that you are impacting the development and the adoption of RCS as it stands today. I mean, the Mobile Ecosystem Forum spent 3 days on RCS back in September. A lot of stuff was covered in that context. So it just depends on how you spin it, is probably what I would say. Anyone else? Okay, I'll take the last word. Gentlemen, thank you so very much for your time, your insight, your intelligence, and your energy in the space. I want to thank you again for working with me in the MEF over the last few weeks to pull this off. And I want to thank the ladies and gentlemen of the audience. We started off with around 75, and we're right now at 57. So this has obviously maintained everyone's interest, and it's primarily because of the quality of the conversation. So have a good day, everybody.
Thanks, Paul. This was great.
Perfect.
Thanks, everyone.
Thanks, Paul. Thanks for the opportunity.
Thank you, Paul.
Thanks, everyone. Bye.